All right, my people. We have a new week with a new market overview to do. This week's market overview is going to be a little bit different because it's a lot of fundamentals. It's a lot of fundamentals affecting the markets, which means basically the technicals, I don't want to say goes out the window, they never do so, but they will play a lesser role in this scenario this week on the markets. And it will be important for us to keep track of what's going on in the fundamentals. So Frederick, my man, will take care of the technicals with you, and then I will jump into the fundamentals. So my man, you take the lead. I'm gonna pass you the host. Boom, like that.
All right. So we're just gonna go straight to the dollar, basically. So the dollar is doing some funny stuff now, basically. So we are moving down, like we're still moving down. There's no doubt about it. We have high, low, high. We want a new low, but the thing is, it doesn't break. I think the news tomorrow is gonna determine which way the market is gonna go. But right now, it is really quiet, and most of the currency pairs are either consolidating or just waiting for some sort of decision which way the market is going. But what we're seeing right now on the daily perspective, when you're pulling the Fibonacci from the high to the low, it is that it respected the 61, and that means we need to start dropping time frames. But we have a strong support in this area. So you can see the dollar pushed into the support, bounced back up, and we haven't broke the support. I think when we broke the support, that means we're going to get the indication of which way the currency is going to go. If it's good news for the dollar tomorrow and it's making the dollar strong, then we're going to see gold, eurusd, and other currency pairs drop.
Looks like there was a lot of liquidity underneath the dollar there.
Yeah, here, yeah. So,
but under the support there, at a fair value gap in a couple of weeks to grab.
Yeah, we have one. Let me see. We have one here. It's been taken out, so we have one more here.
And then on the most recent swing there. To the right. No. Most recent swing.
Oh yeah, here.
There, yeah. So the fair value gap there and all those wicks just above it.
Yeah, so we have it right here, for example. And market is basically playing around. It doesn't give in, or the dollar doesn't give in as we want it to. So that makes right now gold untradeable, even on the higher time frame. See it bounce back up. We have the structure from the last all-time high here. So we want to see some sort of retest, but the question is, how long does it gonna go? Because when something go up as fast as it have done now, the way down is usually also going to go fast in a sort of liquidity grab or something like this. Especially here because you have a strong support here also, and we also have, let's draw a trend line. So we have many indication that market can actually do a wick down or go back to this area before it's continue up. And the same goes with the dollar. If the dollar push a little bit up, and that can be enough to send gold and stuff down here. But right now, market is really dead. I don't see no trading opportunities on gold on the lower time frame, and especially not today. I think everyone is waiting for the news tomorrow. eurusd also consolidating on the bigger picture. It hasn't determined any direction. Only thing we can kind of see, it's a sell. But again, then it goes against the dollar. So this can be a trick for people to get people sellers in before they're gonna take them out to empty their wallets. And as you see on the lower time frame, we basically moving sideways the whole day today. We just broke the low today, so we have to see how it's doing tomorrow. I know Jeremy has some structural points on his chart right now, so we just have to wait and see. But right now, we don't have so many trades. We have some trades we are waiting for, and we have one on, I think it's EJ or EJ. All right, they go now. So GU. Oh, we had some trades waiting here. Maybe we can get one here, for example. We just have to wait and see. But I'm not gonna trade so much until the market has made a decision and we have some answer on which way the dollar is gonna go. So that's the overview I got right now. Actually, it's kind of uncertain which way the market is gonna go. So now we're gonna talk about why it's uncertain, and Jeremy is gonna go on the fundamentals, so you guys can get some information of why the market is moving like it does. So I'm passing the host back to you, and then you can start the show.
Just a sec. I have somebody calling me. What's up here? Yeah, fundamentals, we say, huh? Let's see here. Let me just get my screen up and share screen. Boop, boop, gold, we see. All right, so first and foremost, we're going to get to the fundamentals. We have a crazy week ahead of us. We have CPI readings, we have PPI readings, we have the GDP for Britain, UK, so for the Great British Pound, basically. And we have something very interesting. We have the 30-year bond auction, and we have a 10-year bond auction. So 10-year bond auction on Tuesday, and on Wednesday, the 30-year bond auction. Now, and then we have the PPI, as I said, and what more? These two, I'm not very familiar with them, but it's red folders, high impact news. But we're going to talk about these that I'm familiar with and what they do with the markets and what the indicators show. We're going to start with the bond market. So first and foremost, for you that don't know what bonds are, and make sure you learn what it is, because as a trader, you should know it. It's very important. But just to put it very short, let's say I'm borrowing $1,000 to Frederick. I write an Frederick writes me an IOU letter, a contract that he owes me $1,000. Okay, that IOU letter is the bond. That is a bond. So what the U.S. government does, but this is not only the U.S. government. This is the European government governments as well, Japanese as well. All Western financial systems are built on the system here. So what it is this, that U.S. government needs more money. How do they get more money? They borrow money. Where do they borrow money from? They borrow money from the Federal Reserve and from other central banks around the world. How do they borrow their money? Well, they issue bonds, IOU. So basically, they give this IOU to, let's say, the Federal Reserve, and they say, okay, so we need 1 billion. You're gonna get 3% interest annually interest on this 1 billion, and we want to have it for 10 years. That's a 10-year bond then. Let's have to close my WhatsApp is ringing all the time. Yeah, so what happens then is that Federal Reserve, what do? They print money. So it's actually not the US government printing money, it's the Federal Reserve printing money, right? They're printing money and they're basically selling it or lending it to the US government and get bonds in return. Now, the US government needs a lot of money. So they are basically selling these bonds all over the world. They're spreading these bonds out. So you will find them in Africa, in Asia, in Europe. You will find them in South America. You'll find them everywhere. And you'll find a lot of them. Most countries actually have billions and billions in their on their balance sheets of U.S. Government bonds, and that is because the U.S. dollar is a world currency, right? Now, here's the thing. They have, of course, as we know it, the Federal Reserve has printed a lot of money for the U.S. U.S. has issued a lot of these bonds. And there's basically an inflation on these bonds as well, because the bonds used to be as well as the US dollar. If you had $10,000 worth of US bonds, then that was as well as good as having 10,000 US dollars. but more and more countries, and I can mention a couple of ones from the top. The Chinese government, the Russian government, the Indonesian government, the Saudi government, they are dumping these bonds. They don't want to have them no more. They are selling them off to whoever wants to get them. Why are they doing this? Is because the trust to the US dollar is not as good anymore, but also because they want to detach themselves from the big bully on the block, as I always say it. They want to detach themselves from the bulliness from the US government, dictating on how they should run their systems and their businesses. So countries are selling off these bonds, and that means that the US dollar is weakening. Now, on Tuesday, I think it was, right? Yeah, on Tuesday we have the 10-year US bond, and on Wednesday we have the 30-year US bond. That is an auction. That is auctions for these bonds. So basically, presidents from different central banks around the world gather and place bids on these bonds. Now, here's the thing. When you have these type of auctions, that is when you see how much demand is out there for the US dollar. If you don't get many bidding, as much bidding as normal on these bonds, that means the demand for these bonds is not very high. And everything is indicating that the demand for these bonds is getting less and less and less. The US dollar is artificially propped up. So is the American indexes, not only the American. Let's talk about Europeans as well. Let's talk about Asian indexes as well. This is when a government wants to show that their economy is good. What do? They point at the stock market, at the indexes, at their main indexes. In the US, for the US, it's Dow Jones, so the US 30. It's the Nasdaq. It's the S&P 500. All right, and they show that, look, these guys are making all-time high. They are gaining so and so much percent every month, every year. So our economy is strong. What is it Biden always says? Our economy is strong. Bullshit. You don't have a strong economy when you're borrowing money just to pay interest on the debts that you already have, and that is what the U.S. government is doing. So, what I want to say with this is that things is about to turn very hard and very quick very soon. And that turn is going to be, it's not only a recession, but a depression. I think the market is going to collapse completely. And that is not just my own theories and estimate, but that is actually the estimate of a lot of experts out there that are not biased, that are not biased with some channel or mainstream media or US government or whatever. Those that are, so to say, freelancers, they say the same thing. And everything is pointing in that direction. When exactly this will happen, we don't know. Is it this auction that the bonds are not going to be picked up? We don't know. Probably not. But a lot of us can agree on that this year, 2024, there's going to be a massive, there are going to be massive breaks, collapses in the market. Things is going to start to crack severely. And when that happens, you can expect that US 30, so Dow Jones, Nasdaq, S&P 500, they are going to super collapse. But not only them, you can expect that the European indexes are going to collapse as well. Some of the Asian, definitely the Japanese, Japanese one is already collapsing. But I'm talking about the indexes, of course. They're going to collapse. So you have to watch out for this. And what you're looking at then is what is hedging against a recession or a depression like that. And that would be, of course, as my man Fredrik spoke about, gold. We have a new player on the scene, and that's Bitcoin, crypto in general. But first and foremost, Bitcoin and blue chip cryptos. And what more? Basically, all rare metals like copper, platinum, definitely something to keep your eyes on, and silver. Silver is set to skyrocket. So that is it. But oil, Yeah,
Yeah.
but the problem is, oh, bro, oil is so attached to the US dollar. Okay, the petrodollar is basically detaching now. So more and more countries are buying oil with the Chinese yuan and stuff like this. But but still though, like for example, Saudis, they are now selling oil also in Chinese yuan, not only in dollar like before. Which goes, by the way, goes to show that a lot of countries are losing trust for the US dollar. But that is what it is. And you must understand also that the US markets, the indexes has been propped up artificially for a long time so that Biden can stand there and say our economy is strong. But it's been it's been done so on the cost of gold. So gold has been artificially pushed down. How is that happening is by Western central banks, and this is real talk now. This is proven. Western central banks have been dumping gold for about 30 years now. They've been dumping it, dumping, selling off, selling off to keep the price down, to keep the price suppressed. Why do they want to do that? It's because if gold spikes, then what will happen is countries that hold the US dollar, they will start holding gold instead. They will sell off the US dollars to buy gold instead, right? Now, of course, the US government doesn't want that. European government doesn't want that as well. So they suppressed the gold price and propped up the indexes that are totally artificially propped up. And therefore, we are in an artificial economy, a bubble that will burst anytime very soon. Sorry for being a doom and gloomer, coming in with such negativity about the market in general. But to be honest, for us as traders, that's positivity because it's easy to predict falls. It's much harder to predict pumps in the market than crashes. Crashes are easy to predict, and we trade. So what do? We trade both up and down. We long and we short markets. So a crash in the market, let it come. Let's make some money out of it. All right. So that's I could do a whole part on this thing here. I have so much more to say, but that's just to be very short and very frank. I'm going to give you guys two quick gems on the markets that I've been looking at today. As you see, gold has been sideways, as my man Frederick mentioned. But I'm going to give you some unusual gems for being me. This is not usual markets for me. So first and foremost, I go on a daily time frame. No, sorry, I go on a 4-hourly time frame. Yes, that's correct. I'm looking at AUD-CAD. AUD-CAD should continue on its downtrend, but to do so, we need a confirmation, and that confirmation right now is on the 4-hourly time frame, market breaking this last significant low that created this high, right? So we want to see that broken, and on the way up again, on the retrace, we entering for a sell. It's a massive sell of over 100 pips. Now, we have the same thing with Swiss franc and Japanese yen. So CHF, JPY. I go to the daily. We either buy from this demand zone that we are in right now, or we will let market drop down here, grab all this liquidity, and jump into a long position from this balanced price range. Okay. Now, how do we know which one is going to be? Well, we're looking for the market structure shift. So right here, right now, we're looking for market structure shift on the hourly time frame. We need to take out this high right here that created this low. If we take that out, then on the pullback, we enter it. If it doesn't happen, then we're waiting for market to drop all the way down to this balanced price range. Same thing there. We can go on a 5-minute time frame, on a 1-minute time frame. We will just wait for that market structure shift, then last significant high to be taken, and on the pullback of that, we will enter for this swing trade. That is the two gems I had. That is some of the fundamental stuff I had. For my people on YouTube, if you like this stuff, comment please. And for all my prosperous people, I will see you guys in the lives. We will trade quite carefully this week because markets are as they are. But of course, we will be in the markets. Frederick, you got something to add?
I think more and more people are going to jump into the AUD-CAD and all the currency pairs that doesn't have anything to do with the dollar, because I think most traders are tired of sitting and waiting for the damn thing we're doing now. I think people just want to put their trades and enjoy.
I'm glad that you're mentioning it because I forgot to say that the reason why I'm looking at AUD CAD and CHF GPY is because it's not attached to the US dollar. Okay. Both the Australian dollar and the Canadian dollar, both of them have a tendency to react to US dollar news, but they don't move as the US dollar. And yeah, as you said, I think a lot of us are quite tired of waiting on the US dollar finding its direction. Is it going to fall? Is it going to fly? But in the meantime, there's always markets to trade.
100%. Yeah, I think that's it. It's best thing this week, just stay out. That's my best thing. Stay out. Don't do anything. Wait for the market structure to become perfect and nice again, or just stay out. Because trading in red news folder every day now is no point. And then what's gonna happen? You're gonna sit when the market is going to start moving nice again, and sit there and regret that you jumped in an unstable market. So you need to make back your loss before you get in profit. It's just instead of just keeping it cool and get your profit, and markets give it to you.
Yeah, definitely co-signing what Fredrik just said. Totally agree. All right, well, people, that's it, huh, Fredrik?
Yeah.
That's it. Have a beautiful week. Trade safe. And if you're in the prosperous, then I'll see you guys on the live stream. All right? Peace out.